Yo, what's good? How you doing? I just woke up, as you can see. Yeah, here's what's gonna happen. I'm do a little day in the life video, just a little one. Not gonna be that big because I wanna cut the BS. I ain't gonna lie. Now I'm gonna head to the corner store buy me a Red Bull because I'm gonna be honest. I barely got any sleep last night. That doesn't matter. I still got shit to do. And it's currently Sunday, so no trades today. But yeah, I'm gonna record this video for you guys. And yeah, before that, I'm gonna head to the gym. Probably hit legs. And that's about it. But stay tuned because a really important topic. It's about fair value gaps. But yeah, I'm gonna teach it exactly how I use it in the markets. And yeah, a really important topic. So yeah, stay tuned. Alright guys, as you saw, that wasn't much. That was the day in the life. I mean, it's still like early in the day. It's like almost 2 p.m. But this is maybe realistic. Like, I didn't record much, but like I told you, I wanna cut the unnecessary BS. Let's get straight into business, okay? So what's gonna happen now? I'm gonna teach you about fair value gaps, how to spot them in the markets, etc. So, yes sir, this is what you have been waiting for. Amen.
Alright guys, welcome to this charts section of the video. This is the main part, obviously. This is what this video is all about. So, fair value gaps. What are fair value gaps and how can we spot them in the markets? Well, it's actually, first of all, before I tell anything, I must just give a shout out to ICT, obviously, because I don't own this concept. Like, ICT made this concept, okay? Inner Circle Trader, okay? But I use it a little different way, obviously, because like this is trading. We gotta adjust to our we gotta adjust things and like make it that we can understand it better, and like that's all about trading, man. You can figure out a own strategy, obviously, but that's another topic. But yeah, you can just adjust things. So yeah, shout out to ICT. But I mean, what is a fair value gap? A fair value gap is a imbalance in the markets, essentially. So yeah, what does it mean that it's a imbalance? Imbalance means in the markets when the price moves rapidly in one direction without, because normally the market moves like this, ups and downs, you know, like this retracement and going up or down. When the price moves suddenly, like rapidly to up without having other candles between, that means it's an imbalance, that, and we can use it as our advantage by it's a retracement tool, just like an order block. Okay, this is the fair value gap. Like, it made a big gap in the market, just like the name gap, it has a gap in it. So this is the candle, big candle. The market goes up, we're in an uptrend, okay, goes up, has to fill the imbalance, and then it can continue its direction where it wants. Same as in a downtrend. If we're in a downtrend going down, it leaves this big candle right here. Pause. Okay, it leaves this big candle right here. Okay, goes down, but it has to fill it at some point, and then it can continue its direction where it was going. Hope you understand that. And that's about fair value gaps. I don't want to go too deep into it. I just want you to understand it. It's a retracement tool, and these banks and institutions, the ones that actually move the market, they actually have to fill those imbalances so they can continue its direction. Okay, now let me show you an example from a drawing. Okay, let's say this is these are all up candles. Let's say 3 up candles. Okay, hold on, up candles right here. I know this is kind of goofy, but whatever. Okay, as you can see, this right here, the middle one, the most bigger one, the biggest one, it's a gap. It's a fair value gap, aka in imbalance. So what would I do? I would mark it out like this. From this, the previous candle from the wick, like this, to the other wick, like this. Okay, hope you understand. And then what would happen Like the ideal would be like this, and it goes, fills out the imbalance and continues the direction, because it's a gap that needs to get filled. Okay, hope you understand that. Okay, let me just show you like this. Okay, let's say we're going up, then it does a big move. Okay, big move. Okay, what does it leave here? This fair value gap. Fair value gap, aka imbalance that needs to get filled. And I usually mark it out with, if you want to get the full prime fair value gap or whatever, you can use it like this, aka the 50%. So what happens here, essentially, fills out this continuous direction, because the imbalances needs to get filled. All right, hope you understand that. Okay, let's say it would be a downtrend. Okay, hold on, goes like this, big move. What does it leave behind? This fair value gap, because it's a big move. It's a gap in the market, gap in the price. All right, hope you understand that. Okay, then you mark it out like this, from week to week, from the previous candle weeks, like this. And if you want the prime, this is how you can do it, like this. This is the full area. Okay, the full filling. All right, alrighty. Where's the drawing here? And then the ideal would be like this: fills out the imbalance, continues its direction. And let's say it creates another imbalance right here. What would you do? Mark it out like this, from the previous week to this week. Fills it, continues down. I hope you understand that. But before I do show you the charts, I want to remind you that the fair value gap is like an order block. I have told you that in the previous video. If you haven't saw that, if you haven't watched it, go watch it. But it's like an order block. Okay, it's a retracement tool. You don't use it simply like the only confluence. Don't use it as your only confluence. Obviously, you need more. You need to know what is a liquidity sweep, break of structure. So remember, it's a retracement tool. Really good one, actually. Okay. So I can just, hold on, let me just show you one more time with like candles. This is a downtrend. Okay, creates a candle. This is a downtrend. Okay, then it creates a big candle. This is the gap in the markets. Okay, I know this looks kind of goofy, but whatever. Then how you gonna mark it out? Like this. This is the full gap. Okay, what you gonna do? What are you gonna do? What the price is most likely to do? Goes down, fills the imbalance, continues its direction to the downside if it was bearish. All right, and that's about it. That's about fair value gaps. We're done. I'm kidding. Now let's go into the charts. All right, let's go into the charts. And just like any other like, what is it, concept, any other confluence, they happen on every time frame and in every pair. It doesn't matter, is it freaking crypto, is it forex, is it commodities, is it what is it, indices my bad, is the index, it doesn't matter, like it happens on every time frame, every pair. Okay, all right. Fair value gaps are actually really easy to find. Like, for example, here, what I currently don't have the replay mode, but like, look at this. Where is it? Where do you think is a fair value gap? What happened here? Look at this big ass candle move to the downside. Okay, this big ass candle move to the downside. Look, this is a gap that needs to get filled, and as you can see, where do I take it from? Hold on, let me just show you like this. Where do I take it from? As you can see, the last candle before the gap, the last candle before the gap, the wick from this to where? To the other wick, like this. What does it leave behind? This is the whole gap. Obviously, some people mark it out like this, like this. The whole thing is a gap, okay? But I like to mark it like this, like in the 50%. If you want it, this is the, what is it? Ganbox tool. You can, it's free. You're gonna do it like this, and you're gonna go to the settings. Where is the settings? Settings, and just copy like this. Unless it depends what color is your chart, but do it like this, okay? So take your time. Okay, and there's the settings. Okay, back in here. What happens here? What happens here? We're bearish. What's gonna happen? This feels the imbalance, the fair value gap, continues its direction to the downside. Okay, cool. All right, right here, same thing. Right here, see. Well, this is technically also a fair value gap, but you know, this is a really small one. As you can see, it fills it. Like they're found in everywhere. This is 5-minute time frame. Okay, remember that. So it fills it. Okay, another fair value gap. Like it's so easy to find. Right here, fair value gap has not been filled yet. Okay, and then like I told you, it's found everywhere. This is also a fair value gap. As you can see, this gap right here, from this week to this week, what happens? Gets filled, continues its direction to the upside. All right. What happens here? A liquidity sweep. Switch direction. What does it leave behind? A break structure. Oh no. Break structure right here to the downside. Okay. Break structure. You would enter something like this. Okay. Hold on. Shit. Break structure right here. Down candle followed by an up candle. This is a low. Break structure. What does it leave behind? This imbalance. What does it leave behind? This imbalance. This is also, some people mark it like this, but it depends. I mark it like this because I want the full move. Like I want to make sure that the imbalance got filled. But as you can see, what happened here? Filled the imbalance, not full of it, not all of it, but most of it. Okay. As you can see, it happens on every time frame. Hold on, it happens on every time frame whatsoever. All right, we can now switch to the time frame. Actually, we can switch the time frame. All right. Okay, right here. What happens here? This is a perfect example, actually. Real time. As you can see, 3 candles. Okay. This is the whole fair value gap that got filled, but yet hasn't done anything. Okay, because it's currently weekend. It's Sunday. Market opens soon. Market opens tomorrow, so we're not like doesn't move. Okay. So that would be a fill of fair value gap, but let's just see what's going to happen, because keep in mind that it filled this order block, so it can actually sweep the direction. But this is also a order block right here. This thing, order block. So it can just take that also. And on the 4-hour, this is also a fair value gap that just got filled. So keep in mind, okay. That may sounded like that. I think you. Yeah. So it's a fair value gap right here. This is the order block. This is a fair value gap. Okay. I hope you understand, bro. All right. Every time frame. Okay. Look at this. what happens here? Liquidity gets swept. You can see sweep of a liquidity. Okay, what happens then? Break of structure. Why is it a break of structure? Down candle followed by an up candle, a low. We're on an uptrend, we sweep liquidity, break structure to the downside. Okay, you should know that because you have watched my videos. How you did. If you haven't, then go watch it, the other videos. But let's say we swept liquidity, broke structure to the downside. What does it leave behind? Do you see this big gap, this big down candle? Okay, there are orders that need to get filled, so we're gonna mark out like this whole thing, like this. Okay, filled, gets filled, doesn't fill completely. This area that I marked gets up, continues the direction to the downside. Okay, same thing here. 3 candles, fair value gap, fills it completely, continues the direction to the downside. And like I showed you, this big ass candle move, filled it, continues to the downside. Okay, now let me show you an example what a fair value gap is not. Okay, let me show you. Let me show you what is not a fair value gap. Look at this. As you can see, this 3 candle moves. Okay, you might think like, okay, oh, fair value gap. Nah, bro. As you remember, you gotta take it from here. So this would be the gap, but that is so small that ain't even worth like marking. So yeah, but yeah, as you can see, before it even created the gap, it already got filled right here. So we don't need to mark the fair value gap. Okay, so that is not a fair value gap. You understand me? All right. Okay. This is a 4-hour order block, bullish order block. Okay. Look at this. Look, I mean, okay. Can you find 2 fair value gaps in this picture? In this little area? Can you find 2 fair value gaps? 2 imbalances. Right, first one is this right here. This big ass move. How do we know that is a fair value gap? Because it's a singular candle that has not been filled, meaning these wicks are not above the middle, or this wick is not below the middle. I know that may sound complicated, but it's not. This is a gap from this wick to this wick. Gap that has not been filled. Right now, there it got filled. Okay. We don't break structure yet. Okay. And boom. But just, this is one example why the fair value gap cannot be your only confluence, because you cannot just simply like enter just because of a fair value gap. Obviously, if you get a break of structure and then a fair value gap, then it's another story. But you can get a better entry with it. Okay. Right here. What is this? Big. I mean, it's just so easy to spot these big moves that has not been filled. Look at this. We're bullish. We mark it from here to this candle. This is the imbalance. But the full imbalance is this one. But like I told you, I like to mark it like this, because this gives me more confirmation. Okay, that's just personal preference. Okay, But this is facts. If it completely fills this, then it's more confluence. That's how it is. But okay, let's say you mark it like this. Fills, break structure, continues up. Okay. And yeah, liquidity sweep. As you can see, a liquidity sweep, or this, a liquidity sweep, another liquidity sweep. We don't break structure. Okay, this is his consolidation. Never mind. But right here, this is a fair value gap that actually got filled. Why is it a fair value gap? This big gap that has not been filled right here. I mean, this is also a fair value gap. This even though it's smaller, but this is also a fair value gap, like this. And this one right here, also a fair value gap. Didn't completely fill, but it filled some of it. Okay, and then we broke structure to the downside on the 4-hour, continue down. Okay, and what happened? Wow, what happens here, guys? Remember the last fair value gap that I marked? This just shows you that the fair value gap actually works. As you can see, it didn't get, like I told you, this is why I like to mark it in the 50%, the full fair value gap like this. As you can see, like this, yeah, it did fill it right here a little bit and it continued up. You can use it like that, fine. But when it actually gets filled, it's more confirmation. As you can see, taps into it, break structure to the upside, continues up, and we're up. Liquidity sweep, continues up. Okay. This is a fair value gap. Man, hope you understand that, guys. That's actually quite simple, but if you don't worry, watch it again. Okay, let's switch the pair. Like I told you, it happens on every pair, every time frame whatsoever. Okay. This is one good example. I mean, fair value gaps, they are so easy to find. What happens here? 1, 2, 3 candles, leaving this big gap behind. Okay. Now it's a fair value gap that got filled, continues up. Cool. That's cool. Okay. Okay, is this a fair value gap? Like this, is this a fair value gap? No, this is not a fair value gap. This would be the fair value gap, but if it's that small, I don't even mark it. But if it's noticeable, then I mark it. For example, this right here. This is a fair value gap. This is a fair value gap. These both of them, they are fair value gaps. Okay, what happens here? They get filled. Doesn't break structure yet, but what happens then? Sweeps out these liquidities. Sweeps out these liquidities. Break structure. We continue up. Okay. All right. That's cool. Then we haven't yet broke structure, but I mean we just swept out this 4-hour liquidity. So yeah, then we can, in this case, we could go to a lower time frame, see for a break of structure, and that could be our entry. But obviously, I don't trade like if it's not on the session, like New York Stock Exchange open on S&P 500. I only trade on New York Stock Exchange open because it's the most volatile then. Okay, but yeah, like I told you, on every time frame, every pair, fair value gaps happen. Obviously, remember that higher time frames always hold more power. This is how it is. Okay. Okay. All right. What happens here? This is a big down candle move. It has not been filled. Right here, it gets filled. break structure, but yeah, as you see, sometimes this happens. They don't always work because there are other confluences, but most of the time, if it's a higher time frame, it should work because you know this is how it is. Things need to get filled, but right here it doesn't react to it necessarily. I mean, it does, but it goes here, it's like sweeps liquidity, etc. Okay, right there. Okay, let me give you an example. What is also a fair value gap? I mean, this, first of all, this is not a fair value gap right here. This is not a fair value gap because it's already been filled, so it would be like this. Hope you understand. But this right here, this is a fair value gap. This is a imbalance in the markets. As you can see, gets filled, break structure, continuous upside. Sweeps liquidity, break structure, goes to the upside. Okay, that's cool. And this is just this is a mess currently. Wow. Well, where are we? Okay. And right here, what just happened? We swept liquidity. If we would see now a break structure to the upside, that would most definitely work. And that could work because look at this. This is a really, really noticeable liquidity sweep. That's a great confluence to take a trade. Obviously, you need a entry confluence like a break structure. But yeah, yes, sir. All right, let me find you another one. Okay, right here. What happens here? You see this big gap right here? What happens? We mark it like this from this week to this week. Then we go mark it like this. What happens? Gets filled. Right here, I would go to a lower time frame to see a break of structure. That could be solid. Okay, solid. All right, let's go to a weekly time frame. Let's go to a weekly time frame whatsoever. Okay, as you can see, there are fair value gaps that has not been filled completely. This is a fair value gap that has not been completely filled. Okay, this is a fair value gap that got filled, as you can see, from this week to this week. It's an imbalance in the markets. What happens? Gets filled, not completely, but it gets filled like this. Gets filled, not completely. Okay. And this is also a fair value gap right here. Fair value gap found, not filled whatsoever. So when it comes to this area, you can use it as a confluence. Okay. So what is this? As you can see, from this week to this week, this is a imbalance, fair value gap. You mark it like this. Boom. Break structure to the upside. We weak it. We go down. But keep in mind, this is a hard time frame. Remember that. Even though this looks small, this is actually a massive move because this is a weekly time frame. Look. From this. Oh no. From this to this. Wow. That's freaking 30,000 pips. Or 3,000 pips. Depends on broker. But that is a big move, okay? From here, imbalance gets filled. You would go to a lower time frame, see a break structure, enter. But obviously, it depends on the bias. but hold on. You can see it break structure to the downside on a daily. Okay. Wait, what the heck? Okay, right. Just, I mean, you saw that on a weekly time frame. Just look at how big this move is. You gotta remember that. Higher time frames hold more power. Just look at this. It's all the way down here, left, and right here, we exit. We break structure to the downside. What would you do? Obviously, I don't enter on 4 hour. I'll enter on lower time frames on S&P. I mean, look at this big move. That's a break structure. And what also happens here, like this is also a fair value gap. Look at this. Fair value gap gets filled, continues down. And where does it end? We sweep this liquidity. We also tap into this 4 hour bullish order block. Switch bias. We switch bias whatsoever. Okay? That's simple. And we break structure right here. Break structure to the upside. This is consolidation, okay? Right here. Another fair value gap gets filled. Hold on. Gets filled, goes up. Sweeps liquidity. Goes down, sweeps liquidity. Break structures. Fills imbalance. Fills imbalance. Break structure goes down. Feels more imbalance. Feels this imbalance. Break structure, low time frame, goes up. Man, this is like, when you understand the strategy, you can just read the charts, okay? You can just read it like a book. I know that sounds crazy, but it's true. You can just read it like a book. As you can see, as you saw right there, I just saw everything. And this is just one time frame. Remember that. When you add multiple time frames, like on higher time frame, you see this. Then you go to a lower time frame, you see a break structure. Then you go a lower time frame, see you want a better entry, you enter. Man, but simplified, okay? Don't. That may sound complicated, but just simplified, okay? Here is also a fair value gap right here, gap, and this is also a fair value gap right here. But as you can see, we already broke structure to the upside, so yeah. Liquidity sweep, break structure, cool, break structure to the downside. Yes, sir, ski. Yes, sir, ski. Liquidity sweep. Well, this is just written. This is crazy, and this is a big ass. I don't know if I showed you this, but this is also a fair value gap. This week, from this week to this week, because close to it there is this big gap that needs to get filled. And what happens here? Fills it, break structure, goes down, sweeps liquidity, goes a little bit up, continues down, taps into this 4 hour order block, also takes out fair value gaps, and yeah, sweeps out this short-term liquidity. This liquidity, okay, that's about it, man. That's about fair value gaps. I hope you understood. Fair value gap, I'd say it's a little bit harder than order block to understand. Obviously, it depends on person, but like, it's actually more easier than you think. It's easier than you think, and it will be easier. Just study, backtest, do all what you need, do everything what you need to learn it and the whole strategy, and like, yeah. And when you start to add up these confluences, they start to like click. And yeah, it's just the confluences are starting to add up, and sooner or later you have a strategy, full strategy. And you don't actually need that many confluences, let's be real. I'd say pick 3 main confluences. Don't complicate your trading, guys. Like, if you have a million strategies in your head, then it's just like, oh my days, what the freak, what the flip is going on? But just focus on one, and in that one strategy, pick 3 confluences, I'd say. For me, I mean, obviously more confluences, if you master them, it's better, but like, I'd say it depends on person, but daily bias, liquidity sweep, breaker structure. If you want a better entry, then order block or fair value gap. But that's pretty much all you need, bro. But hey, man, thank you for watching, bros. Thank you for watching, guys. Smash the like button, like, and I have my Discord in bio, free. It's free. Like, trading community, etc. Yeah, thank you for watching, guys.